Wall Street just got a $13 billion surprise, and healthcare stocks are exploding overnight. Compared to January's preliminary 0.09% suggestion, which caught the healthcare sector off guard and caused a sell-off in insurance stocks, the verified 2.48% rate is a significant improvement. This CMS ruling ensures that commercial health insurance providers will get additional Medicare Advantage reimbursements from federal sources, totaling more than $13 billion in 2027. Aetna's parent company, CVS Health, CVS, and United Health, UNH, both saw gains of more than 6% before Tuesday's opening bell. Elevance Health, ELV, increased by about 5%. Gains were also seen by hospital operators and managed care firms, with Centene, CNC, gaining 4% and Molina Healthcare, MOH, rising 7%. The demonstration came after insurers and trade groups engaged in vigorous lobbying, arguing that the January proposal did not take into consideration rising healthcare costs. The near-zero preliminary rate was effectively a cut, according to the Better Medicare Alliance, which pointed out that annual medical cost inflation had been between 7 and 9%. What affected the final rate? Alongside the introduction of the primary rate, CMS made a number of technical changes. The organization will stop using diagnosis data from unlinked chart review documentation when calculating risk scores starting in 2027, with the exception of beneficiaries switching Medicare Advantage carriers. According to the government, plans that heavily rely on chart reviews to record patient problems and obtain higher reimbursements will be disproportionately impacted by this change. CMS also improved the Part D risk adjustment system to include changes required by the Inflation Reduction Act. The risks associated with the rate. About 35 million people are enrolled in Medicare Advantage, which has steadily grown to surpass enrollment in traditional fee-for-service Medicare. The finalized rate is one of the most closely watched variables in the health insurance sector, since it affects the annual distribution of almost $500 billion through private insurance policies. Baseline cost trends, 2026 star ratings that determine quality incentive payments, and updates to risk adjustment computations are included in the rate. CMS confirmed it will continue to use the Medicare Advantage risk adjustment approach from 2024 through 2027. The rate-setting procedure had become unpredictable due to bipartisan concerns about reducing Medicare Advantage spending. Lawmakers from both parties have questioned insurers' documentation practices that could result in higher payments for patients with more reported ailments. CMS had already started limiting those reimbursements under the Biden administration, and the Trump administration's January proposal suggested continued regulatory focus. If you want more market moves before they go viral, hit subscribe now and stay ahead of Wall Street.